In this video, we'll be looking at how to go about creating the adjusted trial balance after the trial balance has been imported into EasyFS Financials. But first, some things we need to take note of. EasyFS enables the passing of 4 types of adjusting entries. At the entity level, we have general journals and entity cash flow journals. At the consolidated level, we have elimination entries and consolidated cash flow entries. This gives you 4 distinct trial balances per period: the entity trial balance, the entity cash flow trial balance, the consolidated trial balance, and the consolidated cash flow trial balance. In terms of impact, the general journal will impact all 4 trial balances, that is the entity trial balance, the entity cash flow trial balance, the consolidated trial balance, and the consolidated cash flow trial balance. The entity cash flow journal will only impact the entity cash flow trial balance. The consolidated elimination entry will impact both the consolidated trial balance and the consolidated cash flow trial balance. The consolidated cash flow general journal will only impact the consolidated cash flow trial balance. Let's have a look at how you go about doing this in the EasyFS Financial software. So how do you go about passing a general journal? Well, I've just started a financial statements. This is my company import trial balance, where I've just demonstrated how to import the trial balance. Now I'm going to just demonstrate how you go about passing a journal. Now all adjustments are handled in the account grouping tab here. As you can see, these are the groups, and this is where you would go to pass any adjustments to your trial balances. So I'm just going to get into that area, and as explained, there are 4 types of adjustments that you can pass. For the entity, there's 2, where to the entity you have the general journal and the entity cash flow adjustment, and at the consolidated level you have the elimination entries and the consolidated cash flow adjustment. So at the entity level, it is the adjustments are per entity. When you move on to the elimination entries, the entries can be passed between entities. So I'm just going to first demonstrate how you do a general journal for a particular entity. So the first thing you need to do is select the entity, and then you have to click on Add New Journal. So as soon as you add the new journal, it will show you the journal, and this is the detail of the journal. That's the summary. You can't actually enter anything into the summary. All entries need to be done in the detail section, which updates the summary. The summary is there purely so that you can select a journal. So suppose if there is more than one journal, you can select which journal you're going to be adjusting. So for example, this is journal number 2, and if you select that one, that's journal number 1. So I'm just going to create a journal here. So you would give it a name. Say for example, I will call this a sales journal, and I will give it a description, say late sales noted. And what you need to do is to select which accounts you're going to be needing in order to pass this journal. Now accounts can be filtered, so which makes it easy for you to locate it. And once you locate the account, you can just select it by clicking on the select account button over here. So for example, I'm going to select the current assets number 3, and I'm also going to need, say for example, a revenue account. So revenue, I'm going to select revenue number 7. Now I'm going to only enter an adjustment for the current year, so I'm going to say we have to record a further 5,000 worth of sales here. So as you can see, the sales are the credits are entered in as a negative. That's how the trial balance has been imported. And as soon as I enter that, you can see it will show you the 5,000 here. This also indicates that it isn't balancing because I haven't put the other side of the entry as yet. So I'm going to put the 5,000 to the current assets, and with that you can see it balances. You also can see that it has created it here. Clear the filter here, you can see the other side of the entry has been passed as well. So as you can see, it's pretty simple when it comes to passing an adjustment in the EasyFS financial statements. One other feature which you have here is that you have the capability to split an account. Now, why would you need to split an account? Well, in a lot of accounting packages, you may need when it comes to preparing your financial, you might have to split it between current and non-current, and the general ledger might only have one account. So how you go about doing that is you would split the account. You can also create new accounts if you need an account when you're preparing the financials for some reason, which to hold a further breakdown, for example. But generally, when you're if you need to split an account so that you can give further breakdowns of the details, I would recommend you use the split, because as I'll just demonstrate now, if you use split, it sort of has a link. It uses the same account number and it gives you the S1 to say that that's the first split. So you could have more than one split. Okay, so as you can see, and then you can just name these accounts as you'd like. I'm just going to call it split 1, split 1, split 1, and I'm going to call this one split 2. Alright, so I just created two just to hold a bit more information or break it down. So I'm going to try and just further break this down. So what I'm going to do is I'm going to just do that in the second journal. So I'm going to select that one, and I'm going to need all three of these accounts. So that one, that, and that. So suppose I needed to further break that account and say maybe a 500 here, maybe a 1000 here, and I'm going to take the 1005 off from, as you can see, it's out of balance by 1005, so I just need to take the 1005 off from there. And as you can see, it has split the account and it has broken it down. Now this makes your grouping much more easier, because you have the accounts you need to group, or the amounts you need to group into particular groups in order to put it onto your financial statements. So that's basically it from a functional perspective as to how you go about passing a journal or an adjustment to your trial balance before you create your financial statements, or to update your financial statements if it's already being created. It's a very similar process when it comes to the cash flow. With the elimination entries, you don't need to select an entity first, because the entities can be passed between entities. So for example, if I select that, I could, for example, this is entity A, I could select for example that account, and then maybe I'll select entity B and say I want maybe that account, and I can pass an entry between the two entities. And this is generally to eliminate some things like inter-entity transactions, inter-entity current accounts, etc. So as you can see, that's how you go about creating a general journal. When it comes to adding a journal, you just basically need to give it which entity you're adding the account to, and give it a number and a description. So that basically will add an account if you need an additional account for some reason, in order to further provide further detail in your financial statements. Okay, similar process when it comes to the cash flow entries. So as you can see, it's a pretty straightforward process when it comes to passing a general journal or an adjustment, and the system updates it here as well. I mean, these trial balances have been just demonstrated here just to show you the figures, so that when it comes to your groupings, you have an idea as what you're grouping. The trial balance of course can be changed based on which trial balance you want to actually see when you're grouping. I've known from my experience, I mean, the general entity trial balance is more than enough for you to know where you're going to be grouping them, even when you're doing the cash flow groupings. I mean, it might help on the cash flow if there is a specific cash flow adjustment which you have to pass, which is only appearing in the cash flow trial balance, or if it's a consolidated cash flow and it's only appearing only in the consolidated cash flow trial balance, so you can change the trial balance accordingly. So that's basically it when it comes to passing and adjusting entry. As you can see, it's pretty straightforward. If you have any issues, you can always email me and I will send you any support you need to be able to better understand this, or I'll upload new videos which will better explain it if any of you have any further issues. Well, that's it from me. I hope you enjoyed this video.